Well, welcome back to Finance Uncut. On today's episode, silver breakout 600% higher. Before we cut to a clip with Ted Butler, I just got a couple of announcements to make. The first thing, we were all disappointed when we heard the news about the LBMA and the bullion banks being exempt from Basel III. Now, since then, I've been doing a lot of reading and a lot of research, and I actually think there's some good news there for us silver and gold investors. And so I'm putting together a video at the moment, and I hope to have it out either later this week or next week. And yeah, I think there's a silver lining there for us silver investors. So stay tuned for that. The other thing, on the 15th of August is the 50th anniversary of Nixon closing the gold window. And so as a special kind of video, I'm actually going to do something that I have never done before. I don't usually talk about actual stocks that I own, but in this video I'm actually going to talk about two gold stocks, two exploration stocks actually, that I own, that I'm buying. I'll give you the ticker codes, and I'll share a whole bunch of information on why I'm buying them and why I think these two stocks are going to make me very, very wealthy. And this isn't something I usually do, and the video won't be financial advice, obviously, but just as some kind of special, think of it that way, of Nixon closing the gold window. I'm going to do this, and it might be the only video that I ever share individual information on actual investments, actual stocks that I own and that I'm buying. Always happy to share stories about stocks that I've sold, because I don't want to influence people to buy or to do something. But for this one off, I'm going to share details of these two stocks. So stay tuned for that. Anyway, let's cut to the clip with Ted Butler.
So is this part of the reason why you said in the article, Ted, that the era of cheating trading tricks is rapidly coming to an end, and an era of not dominated by cheating trading tricks on the COMEX is about to begin?
Absolutely.
Okay.
In fact, this big new decline that we've had today, it's been, going on for a while, is that this is how the big shorts can buy back their short positions without people realizing it, whatever. But okay, when the turn comes and when the rally begins in silver, because the only reason we're down in price is because these big commercial cheaters are rigging the price lower to do exactly this, buy back this short position. Once they stop shorting on the next rally, which I believe is going to be the case, I don't know that, but I believe it, it's a different world. It's going to be a world in which I can give you an example. There was a time in the last 10 years or so where silver had a very large concentrated short position, but it didn't have the largest concentrated short position. Palladium, for a very short period of time, had the largest concentrated short position. Silver was number two, not far below it. It was palladium and silver neck and neck for a while, where it's been always silver being the largest short position, concentrated short position for like 35 years. Well, in any event, what's transformed is that palladium no longer has anywhere near close to the large concentrated short position it had in the past. In fact, it's very average now. It's like not a big deal anymore in palladium. Well, the difference being is that palladium was $600, $800 at the time it had this very large concentrated short position, say 10 years ago or so. And today it doesn't have a big concentrated short position, and the price is 3, 4, 5 times higher. That's exactly what's going to happen in silver. It's a template for what's going to happen in silver, is that when this concentrated short position in silver gets to be in line, okay, with the short positions in every other commodity that's traded, then the price is going to be free, and we're going to see the equivalent move in silver or more. But the equivalent move in silver that we saw in palladium, a 5 or 6 times move from where we are right now. And generally speaking, because silver is a primary investment asset, it's probably going to blow off much more than that. What held palladium down, if you want to call it that, but to $3,000 or so, was that it's not a big investment item. It's strictly it's a precious metal, but it's an industrial item more than anything else, whereas silver is both. It's got the industrial kicker and the investment asset kicker, which is, why we're talking about it today.
By the way, if you're enjoying this video, guys, please hit that like button. Really do appreciate it. So Ted is talking about when the silver shorts end, like they did in palladium, that we'll see a similar run up in silver like we saw in palladium. And as I said, I've been doing a bit of research on this whole Basel III thing, and we were very disappointed to begin with, but there might be a silver lining there. So stay tuned to that video. But palladium did go up 5 times during this period over a couple of years. And could we see the same thing in silver? 5 or 6 time move, 500, 600% move. From today's prices, a 600% move would take us over $150 silver. And as I've shared in other videos, I definitely see triple digit silver. Do I see the 1,000, 4,000, all these kind of claims? I agree with many people that have commented in my videos that if we do see that, it's going to be a very there's going to be a huge reset of things. Things are going to be, we're going to be living in a very difficult world, put it that way. But triple digit silver, absolutely, and that's why I've been based on my macro outlook and the fundamentals and everything that I've looked at, silver is a severely undervalued asset. And I think there's so much more gains. And you'll see as we go through this video, some of the graphs that I show you, you'll understand why I think a 500 or 600% move in silver from today's price is very realistic. Before we get to silver, though, let's just have a look at gold for a second. So when we have a look and measure gold with fiat currency as an insurance, well, you can see the fiscal deficits there. So just measuring it against fiscal deficits, gold is severely undervalued. So, gold's got a lot more room to move. In fact, quite a lot more. $3,000-$4,000 gold is where it should be. And I think it will move there in a short period of time. With the latest relief bill, well, we're looking at even much, much higher gold and therefore much, much higher silver. And when we look at real yields versus gold price, gold's got a lot more room to move there. Now, I recently listened to a podcast with Carl Bass. Carl Bass did on Grant Williams and Bill Fleckenstein's Endgame podcast. And he's of the belief, and he talks to central bankers and people in the know. He believes that we are now in a debt trap. The Fed has basically backed themselves into a corner, and he doesn't see them tapering. He doesn't see them, interest rates rising. Because he even said, if interest rates were to rise even a couple of percent, then everything blows up. And so he's of the opinion that right now, real inflation is around 12.5%. And so we've got, negative real yields of double digits already. And he just said, and in that interview, he talked about speaking with, I think it was the Bank of Japan chairman, and he was talking about, when will you admit that you're monetizing debt and something along those lines. And he said, well, it's not up to us, it's when the market realizes. And so we've got this story of transitory inflation, and the market is believing that. However, that belief is starting to run out. And if we really do see these negative real yields for the next, several years or the next decade, then owning bonds, you're going to get destroyed. Owning cash, you're going to get destroyed. As Kyle says, you want to own hard assets, and that starts with gold and silver. So I found this chart really interesting. The average silver gain loss throughout the year, and this is a 45-year chart and goes through history. So we've just come through a bearish period for silver, and once again we've seen that this year. But if history's any guide to go by, then the remainder of this year is bullish for silver. And I actually did accumulate some more silver and silver stocks over the last month while silver had been beaten down a little bit. So I believe we're still at the beginning of a silver bull market. Now I know many of you are frustrated that you say, well, look at the CPI, look at negative real rates, and look at how much currency is being created, and yet silver can't even stay above $30. And I get your frustrations, but we need to go back in history and have a look at things. In the 1970s, there was periods, we had CPI, double-digit CPI. We had much, much higher interest rates. Yet there was periods where silver went nowhere. In fact, there was periods where silver went down just like it is now, and I'll show you that in a second. But it wasn't until the late 1970s that silver and gold really made their move. And I think it was Doug Casey who wrote in his book Crisis Investing, which came out, I think, in 1979. And I think it was him. And he said that throughout the 1970s, the Fed said the same thing they're saying now, that it's just transitory. That inflation is transitory, and things will come back. And there wasn't a lot of outrage from the market and from people, because they believed the Fed. They believed that things would get better, that inflation would come back down. But it wasn't until towards the late 1970s that the market actually woke up to themselves and realized that this inflation is not transitory, and there was actually a worry that the US dollar was under threat, and people no longer wanted the US dollar, and that's when people went, right, I want that. Just give me gold and silver, give me hard assets. I want something to protect my purchasing power. And by the end of the decade, the American interference in the foreign exchange market began in earnest, because they were worried about the dollar. There was a return to the solution of swaps and bonds at the time. The Federal Reserve entered into a new swap facility with the German Bundesbank, I think in 1978 from memory. And they used those marks it obtained to purchase dollars in the international markets. And then, just as with the prior use of those swap facilities, the US government then issued foreign currency bonds. You probably remember they were called Carter bonds. President Jimmy Carter. The bonds proceeds were used to purchase dollars or eventually repay the swap. I think it was about $10 billion, and Carter bonds were approved at the time. The notes, I think, were like two years or 4 years maturity, and they were issued in Germany and Switzerland for a couple of years between 78 and 1980. And I think the coupon rate was around the 6% mark. There's a couple of different coupon rates there. But yeah, they were backed by the German mark and the Swiss franc. So whether it was due to the Carter bonds or whether it was due to the Fed raising interest rates, which actually peaked at 20% in March 1980, mind you, the dollar actually began to strengthen meaningful in 1980-81, and that's where we saw, I guess, the gold and silver bull market end at that point. So I still think we're early days in this thing. And I think that, and I've said this in many videos, that we are in an inflationary environment. We're going to be in an inflationary decade ahead. And when the market and people finally realize that, you know what, I'm losing purchasing power holding onto these dollars, I want to get rid of them. I'm losing purchasing power. I want to get rid of them and hold hard assets. I want gold and silver. That's when, when people start getting upset, when people actually really start feeling the pinch of inflation, that's when I think we see the gold and silver market really, really perform. And you can see here between 79 and 80, when silver had that massive, 480% gain in that period, there was numerous pullbacks. There's a couple there where silver pulled back 23%, 17%, 18%, 28%. Yet it still had a 480% gain over that 12-month period. So, I think a little bit of history, studying history, and just understanding the macro and where we're at, I believe we're right. Maybe we're early. I think Rick Rule's got some great lessons with investing in precious metals and in mining companies, and I'll share that in that video where I shared the two gold stocks. But basically, he says that we can be right, but we can be early. But then when you're a bit early, some people lose patience and are shaken off. But this is one, I think, in my opinion, one of the most simple, straightforward, investment strategies. And because I think we're in a bull market, a precious metals bull market, I love silver because silver always outperforms gold in these bull markets. Now, I think this should be top of the news. The world's biggest pension fund cuts US bond weighting by record. And we're also, I was trying to find a chart to share with you. I don't know where I saw it, so I apologize. But there's a chart that shows that Russia have cut their trading in US dollars and instead reverted to euros. And that chart is quite large. That change from US dollars to euros is very, very large. And we know that Russia has been accumulating gold. Their sovereign wealth fund, no longer holds US treasuries as well. And so are we seeing, the market, countries not wanting US bonds, not wanting US dollars? This is an argument that Luke Gromen makes. The deflationists make the opposite argument. But, I mean, this speaks for itself. So, if this happens and there's a loss of confidence in the US dollar, and we see significant inflation over the months and years ahead, and, Billionaire Carl Bass is now on record saying that we've already got double-digit negative real yields and double-digit CPI. This might be where gold and silver, really start that big run. Now, I'm also open to the case that asset prices could fall, that we could have a crash in, the bond market, in stocks, in real estate, because they are all severely overvalued. However, once again, Carl Bass in that interview was saying he doesn't see it because he doesn't think the Fed are going to stop. They're not going to taper. They're going to continue to purchase because they've gone down the path so far that simply just turning around on that path will crash everything. Now, obviously, there's some different theories about, the Great Reset or a type of reset, and I've certainly looked at all of them, and it does feel like we're being led to some kind of reset. But gold and silver is a wonderful, wonderful asset to own in a digital world. I want some analog wealth. Think about that for a second. If we do move to central bank digital currencies, I don't want digital assets that can be traced and tracked. Not that I'm doing anything wrong. I just want real tangible analog wealth. I want privacy, I want liberty, I want freedom. But you can see in this chart, when the S&P 500 does decline, you can see that gold and silver perform well. Obviously, gold much better than silver, but silver still, more times than not, preserves your purchasing power against, say, the S&P 500, for example. Do I think a market crash can happen? Yeah, I do. I'm open to that suggestion. And do I think gold and silver could fall back? Yes. We go back to March last year. You can see right down the bottom, the S&P fell 34%. Gold only fell 5%. Silver had a decent fall there too. But I actually backed the truck up and really loaded up on silver at that time. I had shorted the market and made a killing in put options in about 2.5 weeks, and then I just converted that straight into silver. I mean, it was fantastic. Wonderful opportunity for me. But I'm still okay, and this is another lesson that Warren Buffett and Rick Rule teaches, that you buy a stock or buy an asset for $1, and you've bought it because you love it. You've done your fundamental analysis. It's cheap. You're happy with it. However, if it was to fall another 30%, you're very comfortable with that. In fact, you're even happier because nothing's changed with the outlook, with the company, with your macro outlook, that investment. And in fact, it's now being offered up at a discount. And so that's another lesson, where if it falls 30% and you're pulling your hair out and you're crying, then perhaps you shouldn't have bought it at $1. Perhaps you shouldn't buy it at all. Perhaps you don't know why you bought it in the first place. And when you look at gold as a hedge in market sell-offs, versus we looked at stock market just before, but also US 10-year bonds and 3-month treasuries, you can see gold does extremely well. So gold and silver, yep, they're an inflation against inflation and the devaluation of the currency, but they're also a crisis hedge. So are we going to go into a crisis? Perhaps. And when we see, when people really start feeling the bite of inflation, and especially food inflation, that's something that doesn't get talked about quite a lot. But I see coming a massive shortage in food. We're going to see higher prices in food. And when people can't afford to eat, when people struggle putting food on the table, you're going to get a real peed off society. And we only have to look back to the Arab Spring, which was, caused because of food shortages and food prices. So I think we are going into a crisis led by stupid central bank policy, inflation. We're going to have shortages. People are already peed off. People are peed off all around the world with, liberty being taken away from them, with, certain kind of passports being put onto them. And when they start really feeling the pinch of their savings, their income being devalued, I think some of the unhappiness that we've seen on the streets are nothing what we're going to see yet. And so, once again, in times like that, I want to own gold and silver. So do I think gold and silver or silver can go up 600% from here? You betcha. That's right on where I think we're going to end up. But, that's my opinion. It's not financial advice, and, you guys have to go do your own education and analysis and seek your own financial advice. This isn't financial advice, but this is what I'm doing. I've done my macro outlook, my analysis, fundamental, technical, all that. Looked at history. For me, it's a no-brainer. But I've got patience. I might be early. I might be several years early. I don't know when this run in gold and silver will start. Well, it's already started, but that really big run late in the bull market. It might be still another few years away. I don't know. I don't think so, but it could. But that's cool. I'm happy to wait because I'm very confident where I think it's heading. But anyway, that's my opinion. What do you guys think? Love to see your thoughts and opinions in the comments below. Don't forget, if you like this video, guys, please hit that like button. If you haven't yet subscribed, do so. And don't forget to hit that notification bell so that you get all my videos when I put them up. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.